Hi guys, thanks for tuning in to another episode of Nuggets News. Well, it's been a few weeks since I've done a market update. I haven't planned on stopping them at all. It's just been crazy. I've had 3 weddings in 4 weeks and then Easter on the other week. And life is certainly getting in the way where it's getting harder and harder to do these. They do take a lot of time, basically all day Sunday, to do these. So look, I've got one together for you today, a little bit shorter than usual, but I am doing everything I can to get back into the routine and get myself enough time because, look, they are one of my favorite episodes to do. I think you guys do enjoy them as well. So let's get into it. Look, we've had a few thousand subscribers since I've probably last done one of these. It seems like only, yesterday we ticked over that 100,000 mark, which was an amazing milestone. Fantastic interview during the week with JP from Thorchain. So really important that they are like a multi-chain Uniswap. So drawing liquidity from all the different blockchains and different coins, this is really important going forward. So I love what they are doing. And this off-the-cuff thoughts about what was happening with Doge and all these crazy new coins popping up overnight. Plenty of them have collapsed already since that video. 4 days seems like an eternity in the crypto markets. But let's get into it. I do want to just thank everyone. I cannot believe we're at 100,000 on Twitter. Literally a few weeks or months ago, maybe, we passed 50,000 on Twitter. So I'm glad you guys are enjoying some of the content and ideas I share there, and as well as all the bad dad jokes. Look, if you are new to crypto, and I know plenty of you are already doing this, but sending your friends over to this knowledge center, particularly with things like scams going on at the moment, it's just so important that they watch these videos. You don't know how many thousands of dollars could have been saved in the past week if people had gone here and watched the video about how scams work before they'd invested in all these projects. So everything that's there for beginners and the intro stuff and learning all the basics and the words, it's all free. That's why we made it. So head over to the Knowledge Center, make use of that. And obviously, if you want to take your crypto research a bit further, we have all our premium services, the different tiers there. It's been amazing to watch that grow as well. You guys are getting terrific value, and the feedback that we get from you guys there about, well, what do you want next? What type of research? Do you want more video content, more written content? Do we need to save you more time in this area? That really open relationship has been working amazingly well to get you guys in early and get your head around the newest concepts and the newest projects. So well done, and thanks for everyone that has supported us there. Okay, so look, Sydney hit $1 million average house price a couple of years ago, had the fall, it's back there. Now it's Melbourne's turn. Crazy to think that we're kind of celebrating this at a time when we haven't had wage growth for over 10 years. No real wage growth for even probably longer than that. But again, it just does my head in. You're basically saying, hey, it's great. Everyone that owns all the assets is getting richer. And look, some people still say in the comments, you're a property bear. That was never the case, guys. I've always spoken about how I actually had investment property in Tassie, and how if Australia went down the same path as the rest of the world, if we took interest rates to zero and we started printing money, our stock market would look like that and the price of houses would look like that. But also the cost of food and everything would go up. It's no magic recipe. I don't have a crystal ball. You print money and you take rates to zero. Prices of everything goes up and the rich get richer, and inequality, that's also the biggest line that goes up that you should care about, and that ultimately is going to end all of this, because central banks don't have a policy to deal with inequality when the pitchforks go to the streets and people put on yellow vests. And trust me, with the price of food and that going up, it's a very, very fine line from going, that's crazy, that'll never happen, to when people start to get hungry and their kids can't eat, you watch people put on a yellow vest and take to the streets. I'm not saying that's going to happen in Australia first, but I think it's going to happen in a lot more countries than what we currently are sort of giving it credit for possibly happening. All right, so Afterpay plots a US listing after $1 billion sales month. I think this is one of the most glorified, overvalued companies in the world. Anyone that understands the crypto markets knows that there's already companies in crypto that'll let you do the same thing, but it pays it off for you because you bring forward the interest that you can get in the DeFi world. And so these business models are just already obsolete, but people don't realize that because they have no understanding of the crypto or DeFi markets. So they can try and expand what they want. But I know that the US companies are going to try and do this pay later style of business model anyway, and before they let PayPal disrupt them. So the Visas and MasterCards and PayPals, they're probably going to start to let people pay later anyway. But we'll see where that goes. Victoria has one of the worst electric vehicle policies in the world, businesses and environmental groups say. So I'm not sure exactly what it is here, 2.5 cents per kilometre charge for electric vehicles and other zero emission vehicles. So this is the kind of taxes that they're wanting to penalise people for. I mean, it's just so Australian, isn't it? Like trying to penalise people that have got an electric vehicle. Sorry, that slide's slightly out of order, but back to the RBA talking about the cost of living and everything going up. Well, I guess this is one of the reasons why they've got to make these wild taxes, because they've got to try and pay for everything, because in their mind they still don't have their heads around how money works. They've just created all this money, billions of dollars, trillions of dollars out of thin air, and yet they don't want to do that ongoing. They'd rather try and tax people, and this is taxing everyday people. So RBA are talking about further 25% rise in house prices by 2023, so that's only 2 years. And yet they're still not really saying that this is a bubble. Like it's not out of control, don't worry. Really mixed messages there. So Google have deceived some Australians and these mobile users about all the data they're collecting. Finally, we've got a bit of a decision. So maybe this sets a bit of a benchmark for all these big data companies that have been abusing and monetizing our data. PayPal to launch a local wallet in China focused on cross-border payments. Now, we know that PayPal are really looking to integrate crypto, but whether or not this is going to be allowed to happen at a time when China are rolling out their central bank digital currency, I'm not too sure. I'm pretty sure China are going to want to dominate all that cross-border payments and all money and digital payments within their borders. The US has rejected Australia's climate strategy ahead of the global summit. As I said before, I just think Australia missing such a huge opportunity to create new high-paying jobs, regardless of what you think about climate or whatever. China is launching a new app to allow citizens to report each other for expressing mistaken opinions. So this is, I guess, Big Brother, where everything is going, whether it's cameras, and soon we'll have microphones in the street. And people have allowed this to happen. So it's little things like when you say, I don't like the fact that our phone microphones and phone cameras are picking up and listening to us and recording all that Edward Snowden told us about. Now, 10 years ago, that was completely ludicrous. People would laugh you out of the room if you said that. Now it's common knowledge, although a lot of people still don't really care. But this is the next step, because if you give an inch, they take a mile. And we've allowed this to happen. Too many people are just zombies or sheeple, and it's almost too late. It's very hard to get that back once they've gone that extra mile and you've got all those devices in your house listening, as well as all around you in the streets. This is why people are going to pay a premium to get off the beaten track, to get off the grid, have a little slice of heaven with some land, fresh water, renewable energy source, grow your own fruit and veg. That's the sort of thing that people are going to pay a premium for, not a condo on the 30th story in the middle of a big city. I just think we're going to have a complete turnaround in thinking in the next few years. In terms of investing, Asian tycoons are piling into these SPACs just as the US eyes tighter rules. So a lot of these Asian countries hate the fact that so much money leaves their borders for US capital markets. Singapore trio poised for $1.2 billion from record grab SPAC. So this is just speculation into these very early stage companies, just ideas that people are throwing money at. It's all starting to unwind a little bit now. And you think about how much money is in that sector, going into housing, going to stocks in general, and now it's started to flow into the real world, which is what's the scary thing for most people. So yeah, look, UK houses are going up just like we saw in Australia. Draghi's betting the house with Europe's biggest stimulus plan yet, adding more than 70 billion euros on top of what they're already doing. Apparently, if it doesn't work, you just double down and keep doing more of it. Christine Lagarde here, once again, explaining why negative interest rates are great and why they help support individuals and companies. You don't realize that it's good for you to be penalized for saving money. We've decided that's what's best, apparently. And Janet Yellen, once again, this is the central banks. Remember before all the sort of COVID stuff happened, it was all about central banks saving us from climate change. So once again, that narrative's kind of spun around a little bit, and they're looking to make these, bold moves. We're going to have to spend crazy amounts of money to rescue everyone from climate change. There's always a bit of an excuse there in the background. 33% of young Americans are now living with their parents. This has climbed pretty steeply from around 27% back in just before the GFC 10 years ago, really. Very common in places like Japan to have multi-generational households. Socially unacceptable, I think, in the Instagram age. A lot of people teenagers couldn't think of anything worse than having their grandparents in the background of a photo, but that's just the mentality of Westerners and what we've kind of become with our, I guess, entitlement. US weekly jobless claims hit 13 months lows. Home sales tumble. So plenty of Americans here are descending into a deep economic homelessness. Hate to see it, with the rich making these stupid uber amounts of wealth when homelessness is growing, inequality is growing, but that's just what happens with the current sausage machine that I joke about. They can keep stuffing as much money as they want in and keep wondering why what comes out the other side is more inequality and more billionaires. So you need to fix the system, the machine itself. It's not about those two levers that they can pull, interest rates and money printing. Housing starts in the US soar after winter-related setback. So look, this has been up and down a little bit. This is the thing that interests me here is really the fact that people are moving out of the cities. So that's one aspect to it. A third of workers in San Fran won't return to the office, but it's the price of lumber. Someone said this hasn't had a down day in price since March or something crazy. So lumber was trading for $250. This is mid 2020 here. Now up to $1,300. So amazing climb there. Corn is surging. We know that corn is an input for a lot of other things as well, particularly all those nasty high fructose corn syrups. But it's the cost of everything. So these are the manufacturing companies that we look at. Germany, China. They're exporting the inflation because of all the high input costs they have. They then have those next stage of the production manufacturing line, and that gets exported elsewhere. Biden is looking to float a historic tax increase on investment gains for the rich. So markets tanked on this news. Crypto markets followed suit as well. Are they going to get away with this? I think he's targeting the top 0.3%. They always find a way to, I guess, hide or avoid it for whatever reason. But the focus still needs to be on getting more money into the hands of those that are homeless. It's no good increasing taxes on the billionaires so they only make $500 billion a year instead of $600 billion, whatever it is, okay? It's about trying to get $100 or $200 into the homeless person's hands so they can eat. Now, that's where the focus needs to be. And yeah, it might be a form of universal basic income that you don't believe in, but it's almost a solution of trying to help get things back to where they should be because of how far out of whack that it's got at the other end of the spectrum. It's so hard to bring that back now that you've almost got to bring up the bottom 90%. So this is one of the WTF charts of the week that we love over here at Wall Street. This is the electric vehicle SPAC hype boom, so a subsector within that. And the Nikola share price has crashed 88% since back in August. This is like all cycles. Crypto had its boom bust, medical marijuana, electric vehicles, lithium. Plenty of you will remember all these boom busts. We get overinvestment, big washout, and then the good companies tend to come back a couple of years later that are building real products and making revenue. I'll have a quick little drink here. Oh, sorry. Okay, back into it. So it's the riskiest companies now that are able to borrow at the lowest ever costs because everyone's still chasing these yields. With, Christine Lagarde talking about negative interest rates. Well, where do you go to get an interest rate? It's still the bond market. And so they're in the position where they're on their knees going broke and not making any money, but it's cheap for them to borrow. Can you imagine if that was the case for the mortgage market? People that had no income were losing money and unable to pay their bills. it was the cheapest that they'd ever been able to borrow to go buy a house. This is, I guess, the equivalent, but because of financial products and how we can package these into pretty, mortgage-backed securities, collateralized debt obligations, collateralized loan obligations, because someone can make money off it on Wall Street, it's a thing. That's the nuts and bolts of it, basically. Insider transaction ratios. So yes, the insiders have been heavily selling recently. Announced share buybacks, they are accelerating because we know they love to be able to buy back their shares, push up the price while they're looking to exit the market like we just saw there. So look, I guess just in summary of where we're at in a macro sense, foot to the floor with monetary policy. There's very few countries that are actually trying to taper. I think Canada is probably one of the only ones that's talking about cutting back their programs. We're starting to see widespread inflation, and it is out of control, I think, more than central banks want to admit. If it keeps going up at this rate, it's just so difficult for them to pull back. And the only way to pull back is to raise interest rates, and that just crushes everyone that's under record debt. So they're really playing with fire here. The housing thing does my head in. It's the biggest expense by a mile in places like Australia, but probably in a lot of other countries too. And that's just getting more and more unaffordable. It forces people to become renters. Again, it's just the oligarchs, the wealthy, that are the ones that own all the properties, that they don't really care if more people will have to just rent off them. They're just sucking up money off people that can't get ahead, and it's just so hard once you're behind the eight ball to get back further ahead. So yeah, if you're a wealthy person that owns a lot of assets, you're probably licking your lips. You're probably happy. If you're one of the people that are falling behind, you're probably really asking, well, how do I get out of this conundrum I guess you're in? Okie dokie. So let's have a look at all the crypto news. We've had a few exchanges go down in Turkey. Rumors that they're looking to maybe outlaw crypto. The Saudis also looking to ban crypto. Look, it seems like every year there's a new country that's banning crypto. China have flip-flopped from banning to adopting crypto recently, which is a pleasant change. One of the founders has fled the country. Over in the UK, we've got NatWest. They're looking to ban any businesses that accept crypto. So this often happens and continues to this day in Australia. It's anti-competitive, but this is what all the big banks are doing, just saying no to crypto businesses because they're stuck in their old ways, where we've already seen plenty of other businesses integrate crypto or cozy up to crypto. They're realizing the potential and the profitability. Who wouldn't want to be Coinbase's banking partner when they're making billions of dollars a quarter? We've had a second exchange go down in Turkey, and yeah, this is the talk that they're banning crypto payments amid the currency crisis, albeit, but they've always been in currency crisis, and it's just the honey badger. The more you try and fight it, Bitcoin will just trade for a premium on local Bitcoins in Turkey if they ban the exchanges. Morgan Stanley's talking about these central bank digital currencies gaining acceptance for international transactions. It could become the new reserve currency. I don't think that's going to happen anytime soon because, look, China want that. They want to be the global reserve currency with their CBDC. America's been too slow off the mark. Other central banks are mucking around. They don't have the technical capability. It's really the stable coins that have grown from whatever, like USDC, $1 billion to $35, $40 billion, whatever it is at present in 18 months, 2 years. I made that bet with Raul that I think they're going to go to $100 billion and then $1 trillion in a couple of years. In terms of the stable coins, it's not going to come from a central bank. Maybe, for example, the Fed end up adopting USDC, the most widely used, most highly regulated stable coin in that country becomes the central bank digital currency of sorts, maybe. The Bank of England, they're looking to launch a task force, but yeah, like I said, they're just so far behind. China isn't winning the central bank digital currency race. I think they want the world to believe that they're going really well, but I think still technically it's not quite there. The Big Four accounting firm instead claims that the country with the most advanced CBDC is the Bahamas with their sand dollar. So there you go. I love to see the underdog with a little win. Okay, so this is a cool slide. This is what investors paid for Coinbase initially, way back in, when did it start up? When did it raise? 2012, something like that. 15 cents a share, 20 cents, all the way up to more recently, even Paradigm and that, they paid $23. But when it's trading at $420 a share and you paid 15 cents, you're a pretty happy camper. And a lot of those picks and shovels businesses have outperformed even crypto. But a lot of people, depending on when they got in, might say, I would have rather just investing in crypto. Good problem to have. Norway's central bank testing their solutions for a central bank digital currency. Again, over the next 2 years, it's an eternity in my mind. It's just so insignificant compared to what stablecoins are going to be doing. Coinbase, they won't be touched by anyone at HSBC. So this is once again the same as the banking issue. Why some people are just so against dealing with these crypto businesses, it's going to make them look so out of touch with reality, and it's going to cost them customers, I think, pretty soon. Tether is launching on Coinbase Pro. Now, I think Tether's had a few more transparency reports and audits that's pleased the crowd a little bit, and so now they're getting more opportunities like this. We have seen Tether on Tron surpass the amount of Tether on Ethereum. So I think there's a total amount of $40 or $50 billion of Tether. It's on about 5 or 6 different blockchains. And I'll be honest, if I'm just sending from one exchange to another and gas fees are really high, I'll use things like Tether on Tron or even XRP because I'm buying it and then I'm selling it. And this is the problem I have, that doesn't make it a good investment. For every buy, there's a sale 5 seconds later. That is a net zero demand. It doesn't increase the price. It's not good for Tron, particularly when there's no fees. There's not even a demand for TRX token. The same with XRP. There's no demand if fees are low. So that's my problem with these projects. They are great to use and for us to exploit and take advantage of because long term, that's not a profitable business model. Okay, so Binance have launched stocks. Now, they're tokens that trade as stocks. This is a regulatory red flag. Binance love to dance this line. And it's for that reason it's actually really good to see them hire Brian Brooks. So he's former head of, the controller of the currency, in the US. He's someone who you want in your pocket when you're trying to stay on the right side of regulations. Hedge fund behind One River Digital to invest part of a $5.6 billion fund in crypto. More and more of these big funds, they want exposure to this fast-growing sector. Now, Celsius have suffered a huge third-party data breach with all these customers getting the phishing texts and emails. So watch out for that. We've just had one with BlockFi. We had a huge one with Ledger. This right here is the bull case for D-Web. Okay, what I always talk about. Getting away from all these silos that have all our information and you being in control of your data. It's not always about the company being able to monetize it. It's about these things. And going forward, how many times does this have to happen before basically all the criminals in the world know where every person with cryptocurrency lives? And as soon as they, they're quite sophisticated these days. They'll start to follow people on Facebook. And when they see that you've got a flashy new car, they'll go, right, we know that person's fairly wealthy. We know where they live. We're going to go target them. And this is a really big problem to have. Once again, people are going to pay a premium for that grassy patch of land off the grid where you can't get tracked. It's a new address that no one knows where you live. All these kind of things. Privacy, it's going to come with a big premium, I think, going forward. For this reason as well, Nexus Mutual, I love the fact that they're sunsetting their legal entity and looking to go fully decentralized in terms of their insurance model and lifting the KYC requirements. It's now a lot easier to go between the NXM token and the wrapped version of the token as they look to go to this full DAO governance model. So that's an awesome development for one of my favorite projects there. A16Z investing or leading 28 million funding round for data privacy platform Aleo. These guys are using zero knowledge proofs as part of their web platform. So once again, Web3, hugely bullish narrative for this year and next year. Nasdaq listed CleanSpark buys 22,000 Bitcoin miners. This is the race for hash rate. The global hash wars you've heard me talk about. A lot of these energy companies, gas flares or whatever in the US, they don't want China to have the majority of hash rate. Another tech consortium spending $1.3 billion to build this Filecoin mining facility in China. So all these hardware components of Web3, yes, it's one thing for these big companies to spend $1 billion, but we also want maybe in future, 1 billion individuals to be able to help run Filecoin on lightweight devices with light clients and whatnot to decentralize the network. Google Cloud integrates BAM protocol, another Oracle service for real-time crypto price data. And you can now buy and sell, create NFTs with Google Cloud Marketplace partner Origin. So this is one we've had on the channel a few times. We've covered in our research. So well done for Origin. I haven't even checked the price, but I assume that one has boomed when you announced that you're partnering up with Google Cloud. Phone giant Deutsche Telekom invests in Celo's crypto network. So once again, this is the telecom infrastructure. So we're trying to decentralize and use blockchain crypto technology in every layer of the stack, from the software through to the hardware. You know, the telecom, the satellites, the storage network, the processing power, all that sort of thing, until we've fully decentralized every aspect of the internet and how we share data and information. So into gaming, we've got Ubisoft becoming a corporate baker of Tezos. So baker just means staker on the Tezos network. This is one that's, to be honest, I haven't really seen anything that impresses me. It's just become another protocol layer one that doesn't have any big partnerships or projects that I could even name off the top of my head. But hey, Ubisoft is a great catch for them. So let's see what comes of that. DJ Steve Aoki, he's launching sci-fi NFTs on Nifty Gateway. Another, just these cultural aspects of NFTs, and these, I said music was the next big thing in the NFT space, and these DJs and these producers, they've got so many followers and they can start to interact with their audience in an industry that's probably one where you only get to see your fans close up when you do a live concert. Sure, you get to, sell your music and whatnot, but there's nothing like that really close interaction. And look, hopefully, if anyone's in contact with Gary Vee, tell him to pick up the phone and get back to me, because I'm so, I'm just itching to work with him on his NFT project he's got coming up. The Graph launches microtransaction system for blockchain data providers. This is a technology that they're trying to help all the querying of all their different indexes to really speed up with microtransactions for the different blockchains. Multicoin leads $2 million seed round in a storage startup. So this is Filebase. They want to help decentralize all the different storage networks and create, I think it's a marketplace for Filecoin, SIA storage, the different ones that I've spoken about in the past. Very, very cool. Almost like a marketplace for NFTs. Right, this is one of the biggest news that has Maker price absolutely pumping. And you guys know this is one that I own. And I think this joined the 100X club. I think we bought Maker at $40 and it hit $4,000. So they've expanded the collateral, and this is a good and bad thing, and upgraded their liquidation engine. So they've added real-world assets, and one of those was houses. Now, that's great. Things like carbon credits, very cool. But this is no longer decentralized, and Maker was all about decentralization at the start. So when they've got Tether, USDC, houses, this is all now wrapped up in red tape, paperwork. It's part of the traditional system. There's lawyers, there's regulators involved. That's what's backing the DAI stablecoin. So look, I love Maker, and this is technically very cool. It's a big step forward. It's awesome for people that actually want to go forward and collateralize their house through the Maker system to borrow stablecoins. But it's veered off the path of the decentralized dream that the DeFi world kind of needs and is based off. Mirror version 2. So another fantastic project creating synthetic assets with their version 2 now out. We've got Uniswap doing volumes of past $10 billion a week. That's insane to think how far they've come. And Bancor, another DEX that's put out limit orders. So Bancor is good if you want to provide single-side liquidity instead of pairs. But some of these protocols that they're integrating with 0x as a relayer and KeeperDAO, really fantastic projects and technologies as well you should have on your radar. Layer 2 Finance have launched the first version of their mainnet, looking to democratize DeFi. Really simple, zero fees, scaling, another big theme going forward. ETHport using Loopring, trying to help go between layer 1, layer 2, and centralized exchanges there. So this is where that value kind of gets siloed still. And if they can all talk to each other and flow freely, that's another game changer for these scaling technologies. Finally, BitGo has placed 700 million worth of insurance for large amounts of crypto to be held in cold storage. As Adam says here, it's probably one of the most overlooked features about how that big money now has the confidence of custodians, and insurance to park huge sums of money and know that it's insured just like any other asset there. Okay, so let's just have a quick look at price. We've already, in the first 2 hours since the weekly close, we've climbed and retraced 50% of last week's bearish candle. So look, I do think that there's a fairly good chance that this does end up being the bottom, when we saw so many, I guess, chances to try and break down, and we got plenty of wicks every time being bought. A nice big wick here. If we zoom in even further, and you can see how strong of a rally we've had since we grabbed the liquidity there and put in one more low this morning. That tends to be what you want to see to mark a bottom. ETH didn't make one more low, which is bullish. Probably a good sign if you're wanting altcoins to continue to outperform. The US dollar continues to break down. What we're looking for now is whether or not it gets a bounce right here at this 61.8, because if it doesn't and it drops down, we've got the 90 level. But if it free falls and makes new lows, that allows crypto to have, again, another huge run. But very important here, if the US dollar bounces, it is going to make it harder for Bitcoin to continue that rip higher. So look, we're not too far into the day at the moment. We're going to wait and see how big of a volume candle this is. And if it gets, a huge volume day and it retraces a lot of this move, that's going to give people a lot of confidence that that correction is finally over. And these are some pretty nice patterns on some of the altcoins that we are watching. These are the sort of 3 candle reversal patterns that you do want to see. So look, altcoins possibly continue to outperform here. Same Bitcoin dominance reminds me a lot of the US dollar, doesn't it? It's right around, let's clear all that. The key level that we were watching was around here, wasn't it? So if it loses that, hey, we might have a massive alt season if we drop any lower than 50. Guys, that is just about everything we had content-wise. Remember to get your friends over to Collective Shift, get them to sign up. Premium members, be sure to check out all this research and the daily calls that we're doing with all our new content creators. Other than that, guys, smash that like button, subscribe if you haven't already, share these videos around. I'll talk to you again soon. Cheers.